So it is time for SoFi's earnings call, and man am I excited, because is this going to be the catalyst to send the stock to the moon, or are we going to fall back down to earth in short order? So let's talk about if that is indeed the case again, and more importantly, what actually matters on this earnings, and I'll give you my exact plan for SoFi stock too. But guys, I also have a massive warning you must understand too, because it is routinely proven to get us, the retail investors, the little guys, destroyed over and over again, and I don't want you falling victim to it, so we'll talk about that too. Just make sure you like the video if you like getting the truth off the hype, because that is exactly what you're going to get today. So there are 4 things that matter on this earnings, and that's right, I got the hand signals right this time. But understand that there's a lot more in an earnings report. But for this time around, we're only going to discuss the 4 things that matter the most on this earnings call, and I'll tell you my exact plan for SoFi stock and the one big warning that you must avoid too, so let's jump into it. First up, what is the guided impact of crypto? All right, so we all know SoFi is back in the crypto game, and it sent everybody into a frenzy. And I agree, it is great for SoFi and everything that they can do around it, not only now, but in the future as well. But the excitement has bordered on ridiculous hype that accompanies some of the Tesla bulls who add $1 trillion to their market cap projections just because Tesla adds a new color to the lineup or something like that. So with SoFi, it kind of went from excitement to ridiculous pretty fast, and has progressively gotten worse. Now, coming back to reality, let's see if they give us more color on those products and projects and everything else, but more importantly, timelines of when they will start seeing significant contributions to that bottom line. I know, guys, I want it to. We all want it to hit next quarter and be at max velocity, but that's typically not how it works. But most importantly, I care about if they are far enough along and feel confident enough in projecting out to give us actual guidance. That is what I care about personally, not spreadsheets or projections out to 2040 or whatever has been the case so far out there. That's just pure speculation. I don't care about any of that sort of stuff. I care about management's formal guidance on this, which hopefully they are far enough along to give us on this earnings call. And this leads perfectly into number 2, which is, will they continue the beat and raise strategy? SoFi has had incredible earnings performance every time for over 2 years now, maybe 3 years now, and have essentially beat and raise guidance almost every single quarter. But as time wears on, it seems like Wall Street isn't as responsive to it as we would like them to be, and really how SoFi deserves to be treated, but they're just not willing to give them that yet. So SoFi may need to blow it out of the water type of earnings to keep the momentum going, or else the stock will most likely get punished once again. But remember, guys, keep this in the top of your mind. That is to your advantage if you have done evaluation, you are disciplined, and you understand what you own. When they beat it down like that, that is your advantage. It's why I was able to buy SoFi over 10 times last year in the $6 and $7 range, and I bought it this year a bunch of times in that $9 to $10 range. That's to go along with all my regular modified DCA buys as well. And that is exactly what planning, doing your due diligence, and valuation get you is those types of opportunities to buy up this stock. And if you don't know how to do that and you want to learn and see when I buy any stock in real time, the Fall Frenzy Sale is live where you get those buys. Plus you get 5 courses, you get free coaching, you get to listen to earnings calls with me, and a bunch more where we teach you all of that. It's the pinned comment down there. I'll give you more information at the end because we need to talk about this next point because it is absolutely massive for SoFi stock. And that is, do we see significant growth in financial services and tech platforms? This is the key bull case for SoFi. If these grow and they can outpace lending, we will get more of that fintech multiple. Now, if that doesn't happen and it doesn't outpace lending, they will most likely stall, and they're probably going to put us at more of a bank multiple. And remember, guys, we don't control that. Wall Street controls that. So sitting around trying to guess, oh, I believe they should be this type multiple, that type multiple. Well, guys, we don't determine that. Wall Street does. But to help out our case, we need this to continue to put out great numbers every quarter to prove that SoFi is deserving of being a hybrid type of company that can command that type of multiple. We need that number for SoFi to continue growing towards and then beyond the 50% point for SoFi to definitively command that multiple, be closer to fintech than to banking. Sorry, guys, that's just how it works. If we're not able to achieve that, we're not going to get the multiple that I think SoFi really deserves, if I'm being honest here. And number 4, will they adjust formal guidance for the loan platform business? This to me is the most exciting part of SoFi's business that is just now getting started and provides a very nice fee-based income with very low risk for SoFi. That's why I'm so excited to see and to hear, more importantly, do we get adjusted guidance for the loan platform or not? Because it really is a secret sauce that if we can execute for their clients, if SoFi can execute for their clients, that can provide an incredible high margin revenue source with very, very low risk. It also, I believe, hits that middle ground of being more fintech than traditional banking, which should help out with the multiple expansion as well that we want to see that we just talked about. But will they give us formal guidance on it or not? I don't know. I know they've said that they think they will do business-wise in interviews and releases, but remember, guys, I don't care about any of that sort of stuff. Formal guidance adjustments to 2025 and more importantly, 2026 could give us a very, very nice valuation reset, which gives us insight into how much management sees this taking off. And of course, more importantly, it should very well help give us a nice base to increase that valuation. And of course, guys, I believe even if they give great guidance with this, it will still be sandbag because that is what they do. So I'm excited to see what happens here. So what is my plan with SoFi stock? Don't worry, guys, we will get to the big warning here in just a second. But first, let's discuss my plan with SoFi for this earnings. Now, if I'm being honest with you guys, I've been able to just sit back and enjoy the ride since those spring lows, guys. It's been a lot of fun because we were busy loading the boat with bonus shares after bonus shares during those lows. So the ride obviously has been more fun. And I'm not worried about chasing or anything else of that nature like so many folks are out there doing. Just enjoying the ride because we didn't fall for all the Noto is a bad CEO narrative or the macro this, or the tariff that, or any of the other narratives that some retail investors believed and bought into and didn't buy when it was super cheap. Instead, we added cheap shares once again and built out even more bonus shares of this stock, and then you just basically get to sit back, kick up, and relax and enjoy the run. I know, I see all kinds of opinions down in the comment section of my videos about SoFi being, dead money or a hard stock to buy or whatever the case is. Well, honestly, at least in my case, SoFi has been easy money the past 3 years for the prudent, disciplined investor who did their due diligence, understood valuation, and had a plan. So I'm going to continue, and I know a lot of you guys are too, you're going to strategically add at your price targets as long as they continue to execute, which I have no doubt about, they're going to continue to execute. Heck, even in the portfolio challenge portfolio that I'm doing with my group, I've been adding it on the dips in there just to increase my share count in that account. Now, to be upfront, it's not ever going to be able to catch my main accounts that I own SoFi in, but share count is what matters in the end, and I'm looking to add that stock on all the significant dips. But if the stock runs up big after earnings, I'm quite content to sit back and keep enjoying the ride. This is why I preach all the time doing valuation, setting price targets, everything else, ignoring the noise and everything, because then you get to build out your position ahead of time based on your plan, based on your due diligence, and all that good stuff, instead of chasing hype and hope and all this other stuff like that. Then you don't have to play the guessing game all the time. Instead, you are in complete control. You don't buy it whenever it's all the rage and it appears safe to invest in, right? That's not when you buy stocks. You buy when folks are freaking out, like in 2022 and 2023 and last year, and even this year when the bulls, even the mega bulls, turned on SoFi stock like they did for no reason. That right there is exactly when you pounce. Remember, guys, keep this in mind. Just this year, earnings were great, guidance was great, execution was great. But the stock price went down, the narrative was negative, the bulls on social media were questioning the investment. That equals the perfect buying opportunity when that happens. And yes, it happens more often than you think because it happened in 2022, 2023, and again at the beginning of this year as well. And actually it did happen in 2024 too, now that I think about it. I have a full position already built out in 2022 and 2023, and I'm well into bonus shares now. So I only add cheap shares when Wall Street gets dumb, which seems to be often these days. So I think we're going to get more opportunities with this stock. You could say unfortunately, but for me it's fortunately because I know it's a great business. I know exactly what I own, and I know it's going to be easy money in the future. So what is the massive warning? So here's the one warning that I have, and it has been my biggest concern with SoFi for you guys out there as the retail investors. And that is avoiding all the hype that comes with this stock and subsequent disappointment and hate that comes because SoFi doesn't meet all this trash hype, expectation stuff, garbage, whatever the heck it is. Avoid all the super squeeze trash to the moon that's been out there for like 3 years now, hadn't happened yet. SoFi at $75 is reasonable in just a month or two, ignore all that sort of stuff. It's just pure silliness in the end. I know this because based on valuation and guidance that management actually gave, they won't be anywhere near that and shouldn't be at this stage if I'm being honest. Now they will get there one day, but there's nothing indicating that it's anytime soon. And if you guys don't believe me, that's okay. But ask all those Tesla shareholders who bought the peak in 2021 because $1,000 split adjusted was right around the corner. Therefore, I was negative or I didn't understand Tesla or whatever the case was. Well, guess what, guys? I was speaking out saying, don't do that. Other folks weren't doing it. And those folks are still waiting and will be for some time for Tesla to hit that $1,000 per share. Now, that doesn't make Tesla a bad company, a bad stock. Just the expectation was bad. Remember, a great stock bought at the wrong price can make for a terrible investment. Now, sure, I absolutely hope that they adjust guidance up, but it would take an incredible, massive increase in guidance to justify those prices that just, I don't think it's going to happen this time around. And then when SoFi doesn't go up to $75 by the end of the month, despite, increased guidance if we get it or whatever the case is, it's not Noto being a bad CEO or SoFi being a bad company or lagging their competitors or any of the other garbage that came after, earnings calls earlier this year. You got to avoid all that hype and then all that doom and gloom and simply look at the fundamentals, do an actual valuation based on management's guidance and see where the business is at. Anything else is simply fool's gold and folly, and you will set yourself up for a lot of pain, mismanaged expectations, and ultimately losing on a stock that has been easy money and will continue to be easy money into the future if you treat it like an investment and not some sort of Wall Street bets type of scenario. And if you're serious about investing the right way and you want to work directly with me, make sure you take advantage of the fall frenzy sale that ends very, very soon, where you get direct access to me. We got 5 free courses. We got free coaching. You got access to the best 6, 7, and 8-figure Discord out there. We do live weekly Q&As. I have tons of exclusive videos that only go released to those guys. They don't get released here on YouTube. And a lot more. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.